Hi everyone, it's 2 o'clock sharp, so let's get started. So this webinar, let's just go through a bit of housekeeping first of all. This webinar is about how to get from buy to let up to the point of being a developer. That's sort of half of the webinar, but I wanted the other half of the webinar to be a questions and answers session, because in every webinar that I do, I'd say about 45 minutes, almost a full webinar, is just answering questions. Now, I didn't want to just do a question and answer session without giving you a bit of value first, which is why we're doing it on from buy to let to developer, because a lot of people are interested in that route when they come into property. So if you have got any questions, I believe you should have a little section at the bottom of your screen, and you can ask me questions in one of two ways. There's a Q&A. I've got a Q&A section, and you can put your questions in there, or you've got a chat section. So I'll be checking both of these places at the end of the webinar for any of your questions. So you can put your questions either in the Q&A section or the chat section. I'm happy to answer everything that I can find in either one of those sections. So if at any point you've got anything that you want to ask, by all means, type them in there. For some of the people that are on board that are on this webinar that have already sent questions across to me, I do have them. I've written them down, and they're in the presentation right at the end already, just in case you're one of the people that's emailed us through a question. So without further ado, let's get cracking. And don't worry if your question has got nothing to do with buy to let to developer. You know, I'm happy to answer any questions. And if I don't know the answer, I can find out the answer. But so far, in the webinars that I've done, in every webinar that I've done, actually, I don't think I've been stumped by any question. So that's not a challenge, by the way. Don't take that as a challenge that I want you to try and stump me. But if you've got any questions about anything, feel free to go ahead. So let's have a look. A little bit of an introduction about me. Those familiar with the way that we do webinars, obviously what we want to do is we want to qualify ourselves as the people to talk to about property. So a little bit about me, a little bit about Sourced, and then into the content. Now that's wow, that doesn't even look like me at the moment. At the moment, I probably look more like Tom Hanks in Castaway than I do like the picture on your screen at the moment. So I'm sure that me is under there somewhere. But I am the franchise director here at Sourced. My name is Chris Kirkwood. I've got a lot of experience of founding, running and growing multiple businesses in different business sectors. I've been involved in property specifically for over 10 years. Like a lot of people probably, I started with property as a side project. Because I was making a lot of money out of the businesses that I was running, and I didn't know what to do with the money. I didn't know what to invest it in. So I think everybody in the UK has sort of got this inbuilt direction to find property as an investment vehicle. So that's how I first got into property, because I wanted to spend some of my own money. And then after being in property for a little bit of time and educating myself, I realized just how much opportunity there is. My smallest project that I've ever done was £55,000, and that was a small 2-bed terraced in Salford. And the biggest project that I've ever done is currently underway, which is £150 million GDV, 500 flats in Manchester. Funnily enough, just around the corner from where that £55,000 house was. Over my time in property, I've gone through lots of different property strategies, and now what I do is I assess all of the deals that come across to me for our franchisees. So our franchisees will find property deals. They'll put the numbers together. They'll want somebody with experience to look over those numbers. That's where I come in. They send the deals across to me in the CRM system. I have a look through the deals. I give them any help and advice, and I also give them direction as to what the next steps are for them to get that deal done. Now on to Sourced. So this is the Sourced website from left to right. So starting with the red section, we've got Sourced Property. So that's where our franchisees can advertise their property deals, and where you can also find a lot of learning tools. So we've got white papers, we've got blogs, we've got videos in there, all about different aspects about property. So if you're interested in further learning at your own leisure, then head over to the property section. The capital section is which is the light blue, that's where we raise money for our franchisees. So if they want to do a deal, we can fund their deal for them. And working in this capital section, that's where we do it. So if they want to fund, let's say, £500,000 deal, we can go out and we can raise that £500,000. And to those investors, they'll get a return on the money that they put into the project. The franchisee gets to do their deal. And potentially, there is always the potential that the franchisee doesn't have to put any of their own money into that deal, so long as they stay under the GDV, GDV loan to GDV of 70%. I'll explain a little bit more about that as we go on. The development section, that's where our bigger projects get done that we're sort of running or involved with at head office, which is the £150 million deal that I talked about earlier. And the care section, which is, I'm not going to talk about that too much. Those of you that have seen the webinars before know the spiel for this. We're investigating the care section at the moment because there is a possibility that it can have a massive impact on the end value of any project that we're doing. And what we want to do is we want to investigate that before we roll it out to our franchisees. So we're going through a couple of cycles of turning a property into a residential care establishment, which doesn't necessarily just mean an old people's home. It can mean a number of things. So we're going through that at the moment before we roll it out to our franchisees. And then on the right-hand side, we've got the franchise. We've got 70 franchisees at the moment across the UK, all taking advantage of the current market conditions and making headway in property. And I had a quick look through the attendance register, and I can see a couple of franchisees on today. So welcome everyone. So what have Source done so far? So the pilot scheme was launched in 2017. That was specifically for the franchise. And then the franchise itself was launched in September of the same year. And by early the next year, in February, we'd hit 20 franchisees. And that just goes to show the amount of people that are interested in property, who want to really devote some of their time towards property and make some money out of property, because we had 20 within a couple of months of first launching. But it's not just about the education. The education, you can go to many different places to get education about property, but education isn't enough, because there's a statistic that was given to me by one of the progressive property people, who said that 93% of people that attend education classes don't actually do anything with the education that they've got, because it's not about the information, it's about the application of the information. And that's why Sourced are different from everybody else that's in the marketplace. Sourced help you apply the information. Sourced are your support. So that's the niche that Sourced were going into. So the franchise had become established at that point, and then what we were doing was adding on to the money lending side of the business at that point. So in August 2018, we received FCA approval, and at the same time, the franchise numbers were growing. November 2018, we launched Sourced Capital in order to fund the franchisees' projects. We launched in February 2019. We launched our development of £150 million. We had a sourced ISA and pension funding approved by March 2019. Source Care was launched just at the back end of last year, and the franchisees have recently just hit 70. So as you can see, all sides of the business are growing all the time. Now, there's not much to talk about in care, in the care part of the just at the top in September 2019. But the point of putting that in there is to show you that the mindset that we have is, we're growing, we're expanding, we're trying to educate ourselves all the time to find the best possible route to make money out of property. We're not just resting on our laurels that flips are what we need to do for the next 3 years, commercial conversions are what we need to do for the next 3 years. We're always on the lookout for opportunity, and always on the lookout for opportunity that we can then pass across to our franchisees. So from buy to let to property developer, and then the Q&A section at the end. And for those of you that joined a little bit late, please put your questions in either the Q&A box or the chat box. I will check both of those places at the end of the webinar. And there will be a significant amount of time for the Q&A. I'll just hang around this afternoon until I've answered all the questions that I possibly can. So, as always, there are numerous ways to get into property. There are numerous strategies. And if you cover, if you look at the way that we tailor our education at Source, we've got maybe 9 courses that we cover at the moment. of which we could expand easily into 12 or 13, I think, different strategies. But then if you go in, like, let's take it, for example, assisted sale is one strategy. But then if you go into the niches of what you can do with an assisted sale, how you can use an assisted sale, then there are millions of different niches in property. There's lots of different ways to get into it, using your own money, using other people's money. It really doesn't matter. There are lots of different options involved in property. But the main aim of newcomers to property, I hear more than any other, is that I want to be a developer, which is, for me, as somebody that's been involved in property for a long time, somebody who understands what the important things in property are, which, just for your benefit, are contracts and finance. They're the two limiting factors in any property deal: contracts and finance. It's really interesting for me to hear people say that they want to be developers, and I would say 9 times out of 10. I think they're saying that because they think it's the right thing to say, rather than they've given it some real thought. Because if you're saying that you want to be a developer, what are you really including in that? Well, really, all you're including is a title. And for me, when I got into property, my targets and my goals were always set on what I wanted to achieve, and that was always income. It was either short-term income or long-term income. That was always the way that I focused my property business. It wasn't on to hit a certain label. So they aspire to get into, most people aspire when they get into property to be financially free. That's a very common phrase that's thrown around in property, to be financially free, to supplement their pension, lots of different goals that are based on income. But then if you talk to them when they first start about what they want to do, it's usually to be a property developer. So first and foremost, if you are, we're going to have people with a wide range of experience on this webinar. If you're brand new to property and you're thinking about, thinking long term, and you're very ambitious, and, all credit to you, I think that's a great thing to be. What I would say is, don't get fixated on a label. What you need to do is you need to make sure that you're making your plans based on numbers and what you can achieve financially, rather than what you can do in terms of what you call yourself. So I want to be a developer, and I want to do new build. And I think the reason that people say stuff like that is because they see it as the pinnacle. They see, like trading deals as an entry level to property. But being a developer, or being somebody that builds houses from the ground, as being that place where, you've reached the peak. You can't go any bigger than being a developer. And the interesting thing about that is, obviously, why? What if being a developer nets you £1 profit per deal, but if you did another strategy, it made you £1 million per deal? What would you rather do? Would you rather be a developer for £1 profit, or be something else for £1 million? Now, if there's anybody on this webinar that is going to say that they'd rather be a developer for £1 profit, then I'm going to call you crazy right now, because for me, that's not what this is all about. This is all about giving yourself that freedom by creating as much profit as you possibly can. So your income provides you with the lifestyle you're after, not the labels. So again, when you're making your plans, focus on the money, don't focus on the labels, and set targets based on the money you're going to make. So I'll give you an example. We've got a franchisee at the moment. I think we talk about him a little bit later in the webinar as well. He's going to make £1 million profit from a commercial conversion. Now, that £1 million is the first deal that he's ever done. We'll get into that, because obviously this is about the growth from buy-to-let into developer. That £1 million is the first project that he's ever done, because financially and personally he's set up to do a project of that size. But from his point of view, before he came into property, if he was thinking, I want to make £100,000 a year, he's now got a fairly risk-free way of making that amount of money from a deal that doesn't involve being a developer, and doesn't involve doing new build stuff. So you need to take into consideration what your goals are, and the easiest way to achieve your goals, because I can almost guarantee that being a new build developer is not one of the easiest ways that you can make, say, a 6-figure sum, because it is fraught with problems, and fraught with big problems, because obviously what you're doing is you're building something on land in which has never been built before, 9 times out of 10. So what's the major factor most people fail to take into consideration when they're becoming a new build developer? And this is something that we haven't talked about, or I haven't mentioned yet, and that is cash flow. So if you are, we've talked about the problems of building on new land, that can potentially create huge headaches for you as you're a new build developer, but also you need to take into consideration your cash flow from beginning to end. I mean, let's go right back to the beginning of when you're looking at a project. If you're, say, doing something that hasn't got any planning permission, the longest I've heard of something being in with the council for planning has been 9 years. So planning wasn't approved for 9 years. At the end of 9 years, it was approved. But imagine if you find one piece of land, one thing that you secure, and therefore put some of your own money into it potentially, and you don't even get the permission to do it for 9 years. How are you going to fund yourself through that period where you're not making any money? If the margins are fairly tight, then you're relying on that whole project to get finished before you get paid. And 9 times out of 10, if you're going to start to sell units off plan, then you're going to need to put that money that you sell the units for back into the project to lower your costs, because you have to borrow less money. It doesn't go straight into your pocket. So from beginning to end, I'd say that a project can quite easily last 2 years, let's say. And through those 2 years, how are you going to fund yourself? Because that's something you really seriously need to take into consideration. Again, a lot of people that are very new to property come into it saying, I want to be a developer. And again, this is one of the things that they really don't take into consideration. You've got to look after your cash flow first, and you need to have your cash flow as secure as you can through the project that you're looking at, in order to make sure that you don't have to pull out of that project for any reason and then potentially lose more of the money that you've put into it. So the thing that you really need to take into consideration first is cash flow. And that is always the first question that I ask my franchisees when they bring a big deal to me. How are you going to take care of yourself while you're committed to this? So if we look at a typical kind of plan, and we've got being a trader or trading property, and for anybody that doesn't understand what that means, it's securing a property, putting it out to investors, and then selling that property, what's the word I'm looking for? Opportunity to an investor. So let's say the franchisee secured it for £100,000. If you do a refurb on it, which would cost £30,000, it'll be worth £200,000. So instead of the franchisee doing that project themselves, they'll sell it on for a fee of £3,000 to £4,000 onto a property person who's going to do that deal themselves and then make that capital uplift. So that's what a trader is. They trade on deals. And now a developer, as we've established, is somebody who's going to build 9 times out of 10 new build stuff. So if you're trading, from beginning to end of you finding a deal to you getting the deal done, it's going to take you about 2 months. And the end of this line is where you get paid. So for trading, you would get paid as soon as the person that you're selling to has exchanged contracts on that project. Now, if you're developing, the timeline for which it takes you to get paid is much, much longer. Like I said, it's going to be about 2 years before you start to make any money from that project. So your cash flow really needs to be taken into consideration. And then making the profit. So let's look at trading, because one of the things that I want to make sure you understand is, if you look at like a corporate structure of a business, there's a hierarchy and there are clear steps to get to the top of that hierarchy. Whereas property really isn't like that. If you're looking at all the different niches and all the different strategies in property, it really isn't the same. We have a franchisee right now who this year has set his sights on just trading 250 deals. So even now, that franchisee is still selling deals. Investors are out there buying deals right now because, to be honest, now's a fantastic time to sell deals. So his plan for 2020 is to sell 250 deals with an average price of £4,000, which will make him £1 million worth of profit, because there are no real costs involved in trading. So he's looking to turn over £1 million. Pretty much all of that will be profit. Now, if you're going to be a developer, you could also make £1 million worth of profit, but that, like we've talked about, that that from beginning to end of that deal, it's going to take you 24 months. So what is the incentive? Why would you prefer to be a trader, to be a developer, sorry, than be a trader? Other than like the kudos of having that name. Now, the reason that I'm showing you this slide is because the person that's doing this, the franchisee that we have doing this, trading deals and having that sort of having a business that has a lot of communication with people is exactly what he's geared up for. That's his personality type. That's the way he's set up. That's how he likes to deal with people. And so that's absolutely perfect for him. So a lot of people would see trading as sort of an entry strategy into property. He's seeing it, and he will be making more money than the majority of people that are in property that are doing, in inverted commas, you know, sort of higher up deals that are halfway up the hierarchy or three quarters of the way up the hierarchy. And that's worth taking into consideration, because you don't have to, at no point up the, what from outside of property you might think of the hierarchy of property strategies is, you don't have to carry on going up that hierarchy. What you could do is you could just overlap the way that you're operating. So I know at any one point, this franchisee has maybe 10 to 15 deals in negotiation, of which he should be closing about 5 a week. So he's doing about 1 a day. Now, if you apply that to something else, let's say flips, or let's say assisted sales, if you've got a process that is going to make you money, all you need to do is overlap that process so that you're more regularly making money out of that process. And therefore you can make your way to, let's say that you want to earn £100,000, £200,000 a year. That's a good way to hit your goals, and hit your goals a lot sooner than being a developer. And I'll show you why in a few slides' time. Now, one of the good points, and one of the things that I said about developing, was that the potential pitfalls. Now, if you've got, let's say, if you want to make £1 million and you found a deal that makes you £1 million, and you concentrate on that one deal that's going to make you that money, what happens if it falls through? Because that deal isn't necessarily under your control all of the time, especially if you've got finance on that deal. It's usually under the control of some kind of finance house or a bridging company or a JV partner, as well as yourself. So if that one deal falls through, you've just waved goodbye to £1 million worth of potential profit that was in that deal. However, if you're trading smaller deals on, and I'm not necessarily just talking about trading and those £4,000 deals that were in the previous slide, I'm also talking about, you know, making £25,000 profit from a flip, or £60,000 profit from an assisted sale. If one of those deals doesn't come off, you're still going to be okay, because they're smaller deals and you know you're going to have more money coming along at any one point. Whereas if you're developing and that one deal doesn't come off because circumstances change, or something happens, or you had the wrong insurance, or, you know, something that you just don't take into consideration, then that's potentially a much more devastating blow to you and your business. There are ways of mitigating that with developing, and we'll talk about that in just a second. So like I said in the previous slide, what you're looking at in property shouldn't just be, I want to get to the pinnacle. I want to get to what I consider to be the top of the hierarchy in property. What you should be looking at is making your decision based on finances and taking your personality into consideration. If you like to talk to a lot of people all of the time, and you like to sort of negotiate deals all the time, then perhaps trading is for you. If you're much more happy taking smaller risks and going into residential property and, you know, doing refurbs, then that should be the thing that you do. But all of that should be taken into consideration, not just about becoming a developer. And like I said, you know, if one deal doesn't come off and you were counting on that to make you £1 million worth of profit, that's going to be a fairly stressful time. So the stakes are much, much higher in being a developer, because each decision has much more gravity to it. So in terms of handling that, you need to make sure that you are of the right personality type to handle that, because believe me, some people really aren't. I've seen it a few times in people where before a project starts, they seem like they've got it all together. And as soon as the project starts and there is actual money on the line, and it's up to them to make those decisions, then it can fall apart very easily. So can you deal with failure, both personally and financially? And what I mean by that is, if a deal doesn't come off, are you still going to be okay? If you've got £100,000 and you put it all into one property deal because you're going to make £1 million and that deal doesn't come off, financially, you're not set up to take that failure. You've got too much invested. You've got all of your eggs in one basket. So I'm going to show you in a little while about how much money, what the kind of money that you need to get into developing. But also you need to take into consideration that's just one project. You might need to have multiple projects on the go because you need to know that you're going to have an attrition rate that you can deal with. So if you've got 6 projects on the go and you're expecting 2 to fail, but you're still going to make money, that's the way to look at developing. So to give you an example of that, I know somebody who has, what they do is they go out and they secure land and they go for planning permission on that land. And their ratio of success is 10 to 1. So out of every 10 deals, 1 will come off. And every single deal, all the planning that they go for, roughly costs them £100,000 just to get planning. They don't do the projects themselves. They get planning, make the planning gain, and then sell the projects on. But their ratio of success is 10 to 1. And that's the way that their business is set up. Out of that 1, they clearly make enough profit to mitigate the previous 9 losses. But that's how their ratio is set up. So if you're thinking about going into property developing and looking at planning as something that you're prepared to take on, you need to be aware that if you're looking at absolutely brand new projects, then the ratio of success isn't fantastic. And also, not only is it not fantastic, it does take a lot of time to go through the planning process in comparison to sort of normal planning procedures. So now let's have a look at, is it expensive? So not only do build and purchase prices rise, because you're looking at bigger projects, right? You're not just building one house, you're not just doing one refurb, you're potentially building 10, 15, 20, 30 new build properties. And in terms of prices, the purchase price of a piece of land also goes up. The most expensive that I saw, 450 million in central London. So the land prices go up as well. And now the most obvious barrier to entry is that pre-completion money. So pre-completion money, what we mean by that, and I'll get into this in just a second. I've got a good slide that shows you what I mean by pre-completion money if you're not familiar with the way that projects get funded. And then obviously the hidden deterrent that you need to take into consideration is cash flow. So when people come up to you and they say, I want to be a developer, I want to get into the big stuff. For me, it's almost like an automatic reaction now. And it's, well, how are you going to make money until you make money? Is the first question that I'm going to ask them, because it is going to take a long time to make money. So how are they going to look after themselves? Especially for those people that are expecting to go into property full time until they make that big pot of cash when their development is finished. So conveyancing looks like this, as I'm sure a lot of you are familiar with. So you've got your offer, you've got exchange of contracts, and then you've got completion. So that's a normal conveyancing process. And this is when money becomes available. So if you look on the right-hand side under completion, bridging companies, peer-to-peer companies, mortgage companies, and commercial mortgage, sorry, I spelled that wrong, will all lend you money on completion. And if you're going to JV with somebody, they might lend you money throughout the project. So they could lend you money before you've even offered on the project. It's completely up for negotiation. But if you look on this side here in between offer and exchange, these are all the things that you would have to fund before you've borrowed the money from the bridging company or the peer-to-peer company. So you've got surveys and legal fees, you've got architects' fees, you've got planning fees, and you've got surveys and searches for planning. And that can all add up. Like I said, my friend who's got the company that does the 10 to 1 ratio, they expect to spend £100,000 per project on all of these things here. So these can get quite expensive, and it's necessary to understand how much money you're going to need in your pocket or through an investor of yours before you can actually borrow any money from a bridging company or a commercial mortgage. So these need to be taken into consideration on your planning phase. And what you'd need to do in building that project would be to come up with a cash flow forecast for that project. So not only how much cash, if this project's going to cost me £1 million, well, that's great. It's going to cost you £1 million. But when are you going to need all of that money? Because you're not going to need it all at one lump at the end or one lump at the beginning. You're going to need it throughout the project. So you need to take that into consideration, because from your point of view, an advantage for you would be that if you borrow money 3 months from the end, then you don't need to start paying interest on the money that you've borrowed 3 months from the end, right in the very beginning of your project. You only need to borrow, you don't only need to start paying interest on that money when you've borrowed it. So even though you need £1 million in total, you don't need to pay the interest on £1 million from the very beginning. So how the majority of people will do this? Well, they'll start with trading or buy to let in the example of this webinar. And then they'll move on to some bigger projects such as flips or potentially assisted sales. And then move on to flips with their own money, moving on up to something like commercial conversions, and then finally they hit the developer. So this is the more normal way of becoming a property developer, when you're being objective and when you're taking a step back and you're looking at exactly what you need to do in order to become the developer. It's much more difficult to become the developer without a process like this that gradually builds you up into having those pots of cash of £100,000 that you don't absolutely need to see a return on, that you can sacrifice if the project doesn't come off, so long as your business is set up in the correct way. So the first one is trading or buy to let. And for that, you need none of your own money for the trading. For the buy to let, obviously, you might need some of your own money depending on how you're purchasing the property. And then what you do is you could start to build your list of investors and then head up to flips or assisted sales. If you've got investors involved, then what you'll be doing is sacrificing some of the profit. So if you've got investors involved, they'll usually look for about 50-50 splits. Now, when you've done some of them and you've started to build up your pot of money, you could then move on to flips using your own money, because you've built up your own pot. And at that point, you don't have to forego 50% of your profit. You can put all of that profit into your pocket. And then once you've built that pot up a little bit more, you can then move into commercial conversions, which potentially take a little bit more money to get into, but make more profit. For example, the franchisee that we have at the minute, that's going to make around 7 figures from his commercial conversion. And then you move up to developer. So that's a much more risk-free and sensible way to become that developer at the end. Now, for those of you that have seen the webinars before, they'll be familiar with my pipeline, and this is what I go through for franchisees to show them how to build their projects and how to build up to becoming a developer. And this is exactly what I've just talked about. So making regular money in these grey boxes, from trading deals to moving up into flips in the middle, and then finally moving up to the big conversion on the right-hand side. And if you look on the left, these are the months of the year. So you've got 1 to 12 months of the year, and you've got a trading deal happening every 2 months to provide you the cash flow, and then the experience and the bigger deals going on in the middle, and then the big conversion at the other side. And now, as we talked about before, if you are looking at one big, new build or conversion or whatever, you need to very seriously take a look at what kind of profit you're going to be making from that, and then look at how you could make that profit in a potentially mitigate your risk for it. So I would personally rather do 4 flips in a year and make £100,000 than do 1 conversion deal in a year and make £100,000. So you need to look at it sensibly and look at it as a business instead of a way of sort of stroking your ego that you are capable of doing one of these bigger deals. If you can do 4 of these flip deals and one of them doesn't come off, then you're still going to make £75,000. If you're going to do that one big conversion or new build deal and it doesn't come off, then you've made absolutely no income at all for that year. So again, from buy to let to property developer, you need to look at that seriously and work out what your goals are and work out what you're trying to achieve. Now, these are all ways that you can borrow money in order to do a development deal. And generally, the loan to values and the way that they calculate their finance stays pretty constant, no matter what the size of the deal. Now, if anybody wants to know a little bit more about bridging finance, I did a webinar last week all about funding. If you head over to YouTube, that's now on our YouTube channel, which is, if you go over to YouTube and type in Sourced, you'll see our channel, and then if you go to if you have a look down, I think it comes down when you click on videos, it comes down as one of the most recent videos, because I think that's how YouTube organizes it. But it's a webinar all about funding, and it talks about, for bridging finance, we've got down here how much it would cost, or the loan to value for purchasing using bridging finance. But in the webinar last week, we talked about what development finance would look like through bridging companies as well, because it gets slightly more complicated. But to learn about that, then go and have a look at that webinar. And it also talks about peer-to-peer and the other, and mortgages and commercial finance, and a little bit about JV finance as well. So is everybody interested in you becoming a developer? You know, are there any people out there that are going to say, well, actually, you know, I understand that you want to be a developer, but you're not going to be able to? Well, of course there are. Lenders are going to look for experience. So if you're proposing to build 100 houses on a plot and you've got 0 experience, the lenders are going to want to know exactly what experience you've got. And the lenders could come back and say, absolutely not, we're not going to lend to you because you don't have the right amount of experience. And looking at us on a smaller scale, builders also look for easy projects. So builders are going to make their decision based on how much experience you've got as well. I know a lot of builders, and one of the questions that they ask people is, have you managed projects like this before? Have you done projects like this before? Because the people that have done it are less hard work than the people that haven't. And looking back at lenders, when they look for experience, what you could do with the lenders is you can bring in the experience into your team. Now, that's a very easy thing to say, but there are 2 very big considerations with that. One, the first consideration is you're going to be sharing something with that person that you bring into your team, because they'll more than likely have to be named on the SPV for your property, for the project that you're doing. So if you're bringing them in, you need to have a very, very, very good, close working relationship with that person or team. Because if you don't and it all falls apart, that jeopardizes the whole project. And the other thing that you need to take into consideration is you're going to have to share some of your profit with them. So if you're doing that as a 50-50 split, and you were expecting to make £1 million, and that's now gone down to £500,000, well, again, you need to reassess if there's any other way that you can make £500,000 rather than risking it all in one deal, because it's something that really seriously needs to be taken into consideration. Now, what we have is sourced is we have a goal setting and planning and accountability booklet. And this is fantastic for me because the franchisees all fill this in, and it really gives me an insight as to what they're trying to achieve. But not only that, why they're trying to achieve it. Because a lot of people will make fairly ill-informed decisions on what direction they think they should be going in. And if you think you should be going in the direction of being a new build developer, then really I think you should take a look back at why you're trying to achieve that, and to see whether you've got another way of trying to achieve it. Now, I realize that I've been not encouraging towards becoming a new build developer. And I just want to make sure that you understand that we do have projects going on right now. In fact, our director, one of our directors, is doing a project, a new build development right now. So I'm not completely against them. Most of the people that come onto these webinars, however, are fairly new to property, and I want to make it realistic for you. You can achieve new build development. You can do new development. There are lots of hurdles in your way, and hopefully I've highlighted some of those hurdles for you right now. Now, we've got a couple of franchisees. We've got one we're just about to fund, actually, for one of our franchisees who's going to be building 7 new build houses on a plot of land. Now, that already has planning, so that's a big hurdle over and done with. And we're happily going to fund that for that franchisee, because it makes sense. It's an excellent deal. And all the numbers are there, and it makes a lot of sense. And there's very little risk in terms of doing it without planning or looking at different kind of deals. So we do deals like this. We do help people do deals like this. And that franchisee also has a lot of experience at doing deals like that. So again, he's got what it takes. He's got a proven track record, and so we're happy to lend to him. But in terms of people coming newly into the sector, I just want to make sure that you understand that you need to have a lot of credibility to get into these kind of projects. And also you need to really understand all of the numbers that are involved. And again, if you want to look at how to do the numbers, we've got a previous webinar in our YouTube channel for you to go and have a look at in how to put numbers together and how to do your due diligence on projects. So looking at Sourced and what we do, we can fund 100% of all profitable property investments. And for that next development of 7 new houses for one of our franchisees, we're going to fund that project. We're going to fund all of the purchase cost, and we're going to fund all of the development cost for that franchisee. We've got a huge network of 70 offices throughout the country, and this is a testimonial for somebody who's borrowed from us previously to fund one of his projects. Being part of the franchise means that you get property development leads, which we send across to you. They could be commercial leads, they could be planning leads, below market value, portfolio refurbishment, any kind of property leads. And we also have access to 130,000 investors that you can sell your property deals onto. This is what our training looks like. And as you can see, we've got a new build developments part of that training because, like I said, we don't discourage it. We're just realistic in the way that we look at those new build developments. Because again, if you can make £1 million from this, you can make £1 million from any of the other things that we teach to our franchisees. Our training schedule is available for you to download if you want to have a look at it here. We've got our training schedule, which puts on 70 training days per year, and it's comprehensive across a multitude of different property strategies. But importantly, it links up those property strategies as well. And we're happy to sit down with you at any point and say, okay, this is where you're going to start. Where are you going to be? How can we help you get to where you want to be? And you're currently making, 20, 30, 40,000 pounds a year, but you want to be making £500,000 a year. How can we draw that line to there? And what is it going to look like when we do it? We're happy to have those conversations with you because that's where our experience comes into building your business. So this is what the first half of the year looks like in our training schedule. And this is the second half of the year. Training every single month, meetups every single month. And the training, the first training is compulsory, but if you want to do any training thereafter, that's all up to you. So you don't have to come on rent and service accommodation training if you don't want to. You can go on to the commercial conversions and planning training. It's completely up to you what training you come on. In terms of support, we have bi-monthly support days where we get together franchisees in a room, no more than 5 at a time, and we have like a mastermind session with those franchisees. Fantastically powerful, very good learning experience for everybody involved. We've got monthly training events. We've got a dedicated account manager, unlimited deal review, so we'll review all of the deals that you find. We've got monthly one-to-one calls, and we've got optional one-to-one visits, should you so desire, and then just constant email, phone, and video support. Now, what does all of this cost to become part of a national brand and have your own 40,000 household territory? You've got the induction training and then all of the other training behind that. Proven business model with support and an operation manual. And you've got exposure to the property website, attracting thousands and thousands of monthly visits. And that's £12,500 plus VAT to become part of Sourced. And the monthly license fee for the ongoing costs include all of your property leads, all of your investor leads, all of your support, national brand marketing, bi-monthly support days, access to the peer-to-peer platform to fund your deals 100%, monthly training events. We can help you set your own networking events up, and we can provide you with legal documents that we have access to. If you were going to get all of those things on your own, which would include investor leads and property leads, just for the investor leads, it would cost you £450 a month. With Sourced, it's included. For the property leads, it would cost you £1,500 per month. With Sourced, it's included. So that would come to almost £2,000 if you were going to generate the amount of activity that we do for you a month. But for Sourced, it would cost you only £200 a month. And then from year 2, it will be 5% net profit. And that's important that that's your profit that we're talking about. It's not your turnover. So because Sourced work on the basis that we make money if you make money. Now, this is the project that I was talking about. This is one of our franchisees down in Bournemouth. And he's converting that commercial property into 14 flats. And that project will net him just around £1 million to get that project done. A GDV of 2.2 million. He's buying that for 875,000, and the works are going to cost about 400,000 to get that project done. So with a conservative estimate for the end value of the units, that's 2.2 million. So if we're a bit too conservative with the estimation of the end value, then he could easily be earning well into 7 figures. Okay, so let's have a look at some of the questions. Like I said, I didn't want to just go into the question session, even though I was quite keen on doing just a question session, judged on the previous webinars that we've done. So I've got a couple of questions already. First question is, do you need a lot of experience to become a property developer? Well, I think I've already answered that, but let's just have a recap on that. That you could do a development deal if you had cash. Then you would need very little experience to become a property developer. However, I don't think anybody in their right mind would want to put all of their own money into being a developer if they had no experience. If you're lending money from people, for example, finance houses or even JV partners, then you would need to show them that you had experience of doing similar projects before they would lend you money on those projects. So yes, you do if you're going to borrow money. So what support does Sourced offer in identifying development opportunities? Is it a full-time job? That's a really good question, Grace, and thanks very much for sending that in. So we have just signed up with a company who specialize in identifying development opportunities. And they do that through planning, each individual council's planning department. So they can source deals based on permitted development or planning that's been authorized. And so we supply that software at a huge discount as part of the franchise if you want to focus on development opportunities. Now, in terms of the support that we give you, if you, aside from finding the deal, which this software will do really well, in terms of assessing the deal and walking you through the process of getting that deal done and making sure that all of the boxes are ticked before you commit to getting that deal done, I think that's where most of our value is. We make sure that you're not only taking care of the deal, but also taking care of your own financial position. And we're having those bigger conversations with you. We're not just looking at the deal going, oh yeah, there's £500,000 in that, do it, go and do it. We're breaking it down and we're saying, okay, it is £500,000. It's going to take you this long to earn that £500,000. Therefore, how are we taking care of you from month to month until that £500,000 come in? So we're having a much more objective overview on your whole business and how this deal fits into your business, rather than just looking at one deal from one deal to a time. So Glenn, how do you find such projects if you have no personal funds, but you have the skill set? How do you fund such projects? Sorry. Well, for us, you know, we've got a franchisee who is in exactly that position, and that's the person that's going to build these seven houses. He's got all of his money tied up in other projects. And so if he wasn't part of Sourced, he wouldn't be able to fund this project of 7 houses. And that's exactly why he joined us, basically, to have access to our funding, because we're funding the whole of the purchase and the whole of the build. If you are not part of Sourced and you want to look in other places to do that, and you've got the skill set, then you've got again, Glenn, I would look at the webinar that I did last week, because it gives you 3 options for raising money. One of them is with Sourced. The other 2 are either just with a joint venture partner, and you can find that joint venture partner in absolutely loads of places, all over the internet, all over social media. Just develop your profile in those places, or you can find that money by going through a bridging company and also getting somebody to JV with in order to make up the shortfall, because the bridging company probably won't lend you 100% of everything that you need. And Jamie, do you get involved in properties with no planning? This presents the biggest uplift and you don't have to stick to inferior previous plans. I've paraphrased your question, Jamie, if you're watching. So do you get involved in properties with no planning? Now, we could get involved in properties with no planning, and indeed in the past we have. The important thing is, if you get involved in a property that has no planning, it's going to be you or a JV partner's money that's going into getting that planning before you can borrow money on that deal. And so if you're doing that, you need to make sure that everyone is exactly aware of the risks that are involved, because if that planning doesn't come off, then you've just lost that money that you put into the planning, because you've got no uplift on the land or the property itself that you're planning on knocking down. So yes, we do, but again, it's about building your business in the right way. And if you're looking at a property without any planning, then you need to have a few irons in the fire to make sure at least one of them comes off. And if you've got a few irons in the fire and you're expecting an attrition rate so that some of them drop off, you need to make sure that the other ones that are going to come off have got enough of a profit margin to make up for that loss that you suffered by the planning not being submitted on some of those projects. So yeah, we do, but you've got to look at it in a bigger picture again, Jamie. You need to make sure that you're looking at your entire business plan and not just from one deal to the next. Because what a lot of people do when they get into property as well is they'll look at one deal, they'll see that it's worth £600,000, then they'll look at the planning, oh, it hasn't got planning. But they're already really excited in making that £600,000. In their head, they've spent that £600,000. You know, there's a house at the top of the road that I'm going to move into, and I'm going to do this, and I'm going to buy a new car. I've always wanted a Range Rover, and you know, and so on and so forth. And at that point, it's hard to have that objective, realistic conversation with them because they're emotionally engaged in doing that project. However, what you need to do is you need to make sure that you're looking at as an overview of your business. If that planning doesn't come off, will you be okay? If that planning doesn't come off, have you taken care of yourself for the next couple of years? Are you going to be okay paying the bills next month? So again, it's just a case of looking at it, looking at the overview of everything. Okay, so let's move on to the questions in Zoom themselves. So when assessing development deals, do you only like the bigger ones, or would you consider single unit developments? So thanks very much for your question, Alex. We're doing a couple of single unit developments at the moment. So you know what, I'm interested in any property deal that makes money. That's it. You know, that's what I focus on. If it's a rent to rent deal, if it's a service accommodation deal, if it's a lease option deal, whatever, I really don't mind. I'll look at absolutely anything, and I'm excited by the deals that really stack up, because I'm excited for the franchisees that I work with, knowing how much money they're going to make when the deals come to me and they stack up. When assessing development deals, do you only like the big? Oh, I've got that one, so I've done that one. How many property and investor leads would we receive on average per month? It depends from one month to the other. So if you take a 35,000 property leads and then you divide it by 12, you know, you're going to have more than you can possibly handle in any 1 month. For the investor leads, it depends on how many properties you advertise, because the investor leads come directly to you from advertising out to that list of 130,000. And on average, if you do one project that you're advertising out to that list, you'll get maybe 30 or 40 investors. And what you need to do with those 30 or 40 investors is make sure you have conversations with them, build them, and bring them into your community, so that the next deal that you find, you can go straight out to those investors and make sure that they have first dibs on buying property from you, because you've got an established relationship with them. Can the franchise fee be paid in installments? You can pay the franchise fee in installments, but it all needs to be paid before you come on any training with Sourced. So I'm going to read this long one now. So hi, Chris, how many people would you need for admin if you are looking at trading 250 deals per year? Is this practical and achievable? How does being a Source.co franchisee help the person who is looking to trade 250 deals a year? Great question, Andrew. Okay, so there's two questions in there. One, is it achievable? And two, how does Sourced help? So this person was trading property before he became part of Sourced. But what he found was he was knocking on doors and those doors were not opening to him because he didn't have a big brand, a big reputable and recognizable brand behind him. So he actually came to be part of Sourced so that he had the gravity of a larger company like Sourced behind him. And when he knocked on the doors, when he became part of Sourced, the doors opened, more projects fell in his lap, more properties were there for him to sell. So that's why he became part of Sourced. Now, subsequently, he's taken on a few developments because of the relationships that we've built up. I went out and I looked at one of his projects with him and met one of the sales directors for the company who had built that project. You know, had a great tour of the project, and we helped him negotiate that he was going to get access to that company's other stock all around the country. So he gets a lot of stock from these places, these relationships that we've helped him build up as part of Sourced. Now, how realistic is it for him to sell 250 deals a month? It's his whole business is him and his son. Now, his son is 21, I believe, and I've never seen a more dedicated and hardworking 21-year-old in all of my 40 years. He is fantastic at doing what he does. They both are very, very good. They're both very, very busy, and it's completely realistic. They are absolutely 100% on track to hit 250 deals a year. And that can't be, a fluke, because we're almost 5 months into the year now. So we're almost halfway through the year, and he's on track to hit this. And he's maintained his sales through the lockdown. So he's doing a fantastic job, and I fully expect him to be there or thereabouts at £1 million profit by the end of the year. Quick explanation of the difference between trading and flips, and also what are assisted sales, please. Okay, Tim. Yeah, no problem. So trading is trading an opportunity on. So I might see, well, let's take a flip, for example. The example that I gave in a little bit earlier was, I could buy a house for 100 grand. I could do £30,000 worth of work on it. And then after the £30,000 worth of work, that's worth £200,000. Now, if I do that deal for myself from beginning to end, that would be a flip. I've flipped the property. So I've taken it as a bit of a wreck. I've made it look nice, and I've sold it on. So I've flipped it. Trading would be, I found the property for £100,000 and I don't want to do it myself, but I can see there's an opportunity there. So I'm going to sell that opportunity onto somebody else. So I'll advertise it out on social media and out to the sourced investors and say, this is a project. This is how much it will cost. This is how much it will cost to refurb. This is how much it's going to cost to buy it at the end. And you can make that margin. And I'm going to charge you a sourcing fee. So £3,000 or £4,000 is a sourcing fee. An assisted sale, I'm not going to go into now, but if you go to Sourced on YouTube, you'll see a video there from Nadia Khan, who did an assisted sale, and that's a great way of explaining exactly what an assisted sale is. Can you pay the franchise fee in installments or from profit? It needs to be paid upfront before you come on any of our training. Another one from Tom. So Tom, I'm a 27-year-old chartered surveyor who has experience in delivering projects and construction of home to create a side business, but have limited capital, less than 10 grand. How do I begin my property journey? How can Sourced assist in this? So if you know where to find, so you've got the experience. This is exactly one of the questions that we had earlier, right? You've got the experience, but you don't have the capital. So go back to the funding last week, the webinar that I did last week, and watch that webinar. There are 3 ways to raise money if you don't have the money. Firstly, from a joint venture. Secondly, from a bridging company and a joint venture to make up that top up, because usually bridging companies will lend you 70% of what you need. So you need to get the other 30% from somewhere. So instead of a joint venture funder giving you 100% of the money, they just need to give you 30% of the money. Or from Sourced. So, I mean, if you came on board with Sourced, we can offer you 100% finance, which is exactly what we're doing for a lot of the people that are our franchisees. 100% finance. What they need to pay is like the survey fee up front, and then everything else is over to us. As soon as we can complete on that property, then we can cover all the costs, and that's based on 70% of GDV. So if you work out the GDV of a project, Sourced will lend you 70% of that GDV. So if your project's GDV, if you're going to buy a big property and split it into flats, when you sell those flats at the end, that's the GDV. So the end sale price. So you sell those flats, and you can sell all of the flats for £1 million, but it's cost you £150,000 to buy the property in the first place and £100,000 to do it up. So therefore, if the end value is £1 million, Sourced could lend you £700,000 to do that project. I'm not a confident networker. Can I still do this? Look, if you're looking for, I appreciate your honesty, first of all, Raj. Thank you very much for the question. I'm not a confident networker. I totally get that, right? I hate networking. I'm that guy that stands there in the corner of the room, sort of waiting for people to come to me. I'm not happy going up to other people. I've done it, and I've worked through that barrier, and I get it, and I can do it, but I still don't really like it. Now, of course you can do it. There's more than one way to skin a cat, right? horrible expression, I apologize. If you're looking to raise JV finance from people, then you don't need to have to walk up to that person in that networking room. From my point of view, if you're relying on networking meetings to meet people, you're missing out on a huge opportunity. The big opportunity is social media, because social media is 24/7 and a networking meeting is 3 hours once a month. So I'd much rather have a great presence on social media. So what I would focus on is becoming a social media presence, building your reputation and building your brand on social media. Now, funnily enough, we understand the benefits of this at Source. So the next webinar that I'm going to do specifically for our franchisees is all about social media. That's how seriously we take it. So of course you can, but just look for a way to work with yourself. And also, if you're not a confident networker, the best way to get over a fear is to just get out there and do it. So there are lots of different techniques. I did an NLP course a couple of years ago. There are lots of different techniques that you can use. But the first thing that I would do is don't push yourself if you're not familiar with the ways to overcome it. Instead of doing networking face-to-face, focus on social media and make contacts there. How is the current COVID-19 scenario seen by Sourced in terms of how the value of property will be affected in the latter part of this year and early part of next year? That's a great question, David. So the reports that I've read would sort of indicate that the property market as a whole isn't going to go down by that much, but it is going to go down. So the average that I've seen has been between 5 and 10% for a drop in prices, which is not massive, but they're expecting that the recovery, once COVID-19 has turned around, lockdown's finished and people can trade again, they're expecting the recovery to be very quick, because essentially there's no underlying economic problem like there was in 2007 and 2008. So from the reports that I've seen, by Q4 of this year, Q1 of next year, they're expecting that property prices will have fully recovered. So if you are looking at longer term projects right now, then you have very little to worry about. If you're just about to sign up for a longer term project, because obviously if you had a project on the go and you had to furlough the builders, then that's going to be an issue. But if you've got a longer term project that you're just about to sign up, I think that the property market should have fully recovered. So you have very little to worry about beyond Q1, Q2 next year. If I'm trading deals onto investors or developers, does Source take a percentage of the sourcing fee I get? Not for your first 12 months, Gordon. That's 100% of your own money. And after the first 12 months, we only ask for 5% of your profit. So to put that in context, if you make 100 grand profit out of a deal, we ask for £5,000, but that's only from month 13 onwards. For your first 12 months, everything that you make is yours. And that's to help you build your business. What if my territory is already taken? That's a question that we need to ask Sam, and Sam is our franchise manager. The territories, there are lots and lots of territories available. So, I mean, we're happy to look at your territory. We need to look at that in a bit more detail. So if you pass your details on to Sam, his email address is sam.clayton@source.co, then we'll happily look at the areas that are available to you. If you have an investor database, why would you need to use Sourced Finance? Because a lot of people don't. Okay, the way that Sourced is set up is, I encourage people to find deals that they can do themselves and make big pots of money. Okay, that's my route one. Now, in order to get that done and not use any of your own money, let's say for argument's sake, you need a 30% margin in that deal. Now, if you can't find a deal that's got a 30% margin, but it has got a 25% margin, you might not be able to do that deal yourself, but you could trade that deal onto investors. So if you're looking at one big deal that's got a 30% margin and that's going to take a year to come off, you've got that deal operating in the background, but you're still finding lots and lots of deals that are 22% margin, 25% margin, 27% margin. So you can't overlap your deals because they're not good enough. However, you could sell them on because there is still an appetite from investors for anything that has a margin above 20%. So instead of what a lot of people do outside of Sourced is they'll look at those deals and they'll say, oh no, I can't do that. I'm going to have to let it go. And they'll just push it away and they'll forget about it. But at Source, what we like to do is we like to take that deal and still make money from that deal by trading it on. So over that 1 year, you don't just have the income from this big project that you're doing, but you've also got the income from all of the deals that you've traded on that aren't quite good enough for you to take on yourself. So in that one, in the slide that I showed you earlier, just by trading on one deal per month will make you nearly 50 grand. Now, I don't know about you, maybe your situation is different to mine, but I'm not in the situation in this part of my life where I can just look at £50,000 and say, I don't want any of that, for not a great deal of additional cost or not a great deal of additional effort. So that's why we have the investor database, to be as efficient as we possibly can with all opportunities that come in front of us. How does the 100% funding work? Is there interest to be paid or a profit split? Yes, there is interest to be paid. It's standard funding. The interest is rolled up to the end, so you don't need to pay that interest till the end. And if you want to learn more about 100% funding, what I suggest you do is go and have a look at Sourced Capital, which is the light blue section of our website. 100% funding is based on 70% of the GDV. So like I said, if you've got £1 million project, the project, once you've done it, is going to sell for £1 million. We could lend you £700,000 on that project. And in most cases, that is enough for you to cover all of the purchase costs and all of the build costs. We have lots of deals that are going through this right now. The deal that I showed you in Bournemouth from our franchisee, who's going to make about £1 million, that's all funded through Sourced Capital. So that's how the funding works. Where land property is bought with undesirable planning restraints, do you ever factor in revisiting the planners with changes when necessary, MAs or NMAs? If so, how successful are you with these? It all depends. It all depends on what it's a really good question. It all depends on what the benefit of going through that process is. It depends on how much we've spent, how much money we've got on the table, and how much money we're potentially going to make. We tend to employ, on the bigger projects that we have, we tend to employ planning consultants. And from my point of view, the planning consultants are something that you definitely shouldn't go with the cheapest planning consultant, because the more expensive planning consultants usually have a fantastic hit ratio or success ratio in comparison to the cheaper planning consultants. So we would take in all the information, use local experts and that's another point, local experts. So planning consultants should only be used locally. You know, there's no point in using a planning consultant in Glasgow that is actually, his office is in London, because the best ones that we found network with the council. They actually know the councillors individually. They know exactly what the housing plan is. They know what the councillors are looking for. They know exactly how the planning department operates and what the pressures are on the planning department. So they'll look at your deal beforehand and they'll say, you know, this looks like a great deal. It's exactly what the planning department are looking for. I think this will work. And that's why that person's ratio will be so high. So again, consulting with planning consultants is the way forward, in my opinion. So you find a property and feel that you can buy it at the right price. How do you make an offer if you are in fact looking to sell it on to someone else? Look at that's a question, that's a huge question that I probably can't answer in the next minute. But there are lots of different ways to do that. There's no just one route to do that. You could secure the property. There are 6 different ways of securing property. Anybody that's been on the Source training, those 6 ways should come up into your head immediately. There are 6 different ways of securing property. You can use one of those different ways, or you can always look at it from the other way round, which we've got access to as well, where you secure the investor and then you act on behalf of the investor. So again, we've got access to 130,000 investors, but what I like our franchisees to do is to build up their own little community of investors. So, and that community of investors comes from our list of 130,000. So they'll have telephone conversations and they'll know exactly what that investor is looking for. They'll get the proof of funds. You know, it's all about dealing with it professionally. They'll get the proof of funds and the ID from the investor. They'll have basically the kind of relationship with that investor where they can say, I'm in the estate agents now. This is the property. These are the numbers. I've just done them. This is exactly what you're looking for. Are you happy for me to put in an offer for you? So that's just one of the ways that you can do it. There are lots of other ways that you can do it. Go and watch the other webinars that we did in, say, August, September last year. There were 5 webinars. I think one of them is specifically about sourcing online property. So go and have a look at that webinar, Andrew. There's a lot of information in there that would cover the question that you've just asked. Do franchisees set them up as limited companies, or do they manage to manage the sourcing of flips? That's a great question. Funnily enough, I was talking to an accountant today about exactly that, Alex. It depends on their personal circumstance, because what you're asking is how do they pay as little tax as they possibly can, and that depends on a lot of other factors that is going on in their lives. So the answer to that would be you need to talk to an accountant to find out what the best way to structure your property business is, and that also depends on the kind of deals that you're doing, because if you're going to be sourcing or flipping, that's a different kind of income. That's seen as a different kind of income to owning the property and getting rent for that property, because that is seen as investing, whereas the other could be vatable and it could be seen as a service. I'm not qualified to give advice on that, so it is definitely something that you should talk about with your accountant. But again, with Source, what we're doing is I'm actually setting up a training day to get the accountant in to talk to all of our franchisees about tax issues. So again, you know, that is a very big question. But if you've got an accountant, that's the person that you should be asking about that, Alex. Are group franchisees accepted, i.e. 3 friends, and I would like to go into together? Can we join as one franchise? And if so, how would it work? Yeah, we do have a couple of people that do exactly that. We've got the maximum we've got actually at the moment is 3 people. And the way that you sort that out is through a limited company in most cases. You could either have an agreement or you could have a limited company, and you could divvy up the shares as you saw fit. But yes, you could do that, absolutely. Thanks. How can you join Sourced if you don't have the £12,500 franchise fee? I would have a conversation with Sam, our franchise manager. So Sam has got a really good contact for in a loan company that can do something about that. So sam.clayton@source.co, he's the person to ask about that. Or just like in relation to the previous question, Tom, if you know somebody that has got the money that's interested in property that you can work with over a long period of time, perhaps it's worth joint venturing with them and coming on board in that way. Perhaps that's an option for you. If you provide the property investor leads, why is networking required? Good question. It is a really good question. So why wouldn't you? Why wouldn't you do as much as you possibly can do? You know, if you're saying you've got property leads, you've got investor leads, I'm just going to sit here and let it happen. You know, you might make £80,000 in the next 12 months. However, if you spend your time doing as much as you possibly can, you might make £150,000 in the next 12 months. It's about the attitude of going out there and building your business as competitively and as quickly as you possibly can. So will you still get leads from networking? Absolutely you will. So go out there and generate leads for yourself as well as the ones that we pass across to you. Let me get rid of that one. Okay, this is a big one from Andrew. So I'm currently looking at a semi-detached property which has been empty for some time. It was initially a pub, which then had planning to convert into 2. It's totally suitable for 4 flats, 2,200 square meters, but would Sourced fund something like this, as obviously you wouldn't look to start planning until post-purchase. That said, there is a fallback, as it could be refurbed as a 3-bed house, and borrowing would still be less than 70%. Okay, so what Sourced could do is, if you've got planning if you've already got planning in place, then do your due diligence based on what planning can allow you to do. Because without planning, you don't have a GDV. The GDV is what you can sell those end units for at the end. And if you don't have planning, you can't justify that you're going to sell those end units at the end. But what you do have, from my understanding, is that you have planning to turn it into 2 3-beds, I'm assuming. So do your due diligence and do your numbers based on that. And if that works, then you can purchase it. And you're right, then you could go through planning. Obviously, you'd need to make sure that you had enough time on the loan that Sourced gave you to go through the planning requirement. And then if you can get the planning changed or the planning updated, then you can go on and potentially you could borrow more money from Sourced because your GDV might then have altered. So yes, that can happen. But in order to get the money on completion, you need to have a justifiable GDV. And if you don't have planning in place, you don't have the justifiable GDV. But what you do have in this case is the previous planning to go back to and use that GDV and see if that works. So yeah, it is still possible, a possibility, Andrew, yes. Is Source Capital an exclusive funding product for franchisees only, or is it available to property developers that are not part of the Source network? It's only for franchisees, Source Capital, that's why we set it up. How qualified are the property leads and are also the investors? What are they looking for, etc.? Or do I need to start from scratch? So the property leads are a mix. There are some property leads that are off market. There are some property leads that are on market, but are clearly an opportunity. And what we do is we separate them into different categories. So we'll have, say, repossession leads, we'll have HMO leads, we'll have refurbishment leads, we'll have auction leads, and then it's your responsibility to have a look through that project and then see if it's worth converting and see if you can do that yourself. For the investor leads, we have no problem selling properties right now. We sold 3 properties yesterday. 3 properties yesterday? No, it was 2 properties yesterday, 1 property over the weekend. Through advertising out to our investor list. And at the moment, because we're all working from home, I get a lot of phone calls that are coming through to Sourced HQ, and at Sourced HQ, I get almost maybe 20 calls a day from investors that are saying, I saw a property come up this morning on the email. I'm really interested. Can you send me more details? So we have a very, very active list of investors. What AML and investor client check search software do Source use? What we do, that's a capital question more so than for me. And I can't tell you what the software is purely because I don't know what it is. So if investors come into Source Capital, then they go through an AML procedure. And I don't know what that is because I don't spend a lot of my time in Source Capital. So I'm not sure about that one, Gordon. I can find out for you. Or you can send an email to Source Capital through the Source Capital website. So go to the Source website, click on Capital, and then you can get in touch with them from there. Is there a minimum development type when financing GDV, i.e. a 2-bed bungalow into a 4-bed house, or does it have to be a larger conversion? Or no, there's no minimum. Glenn, you sent me that question beforehand, didn't you? So thanks very much for that. There's no minimum. No, it doesn't matter. As long as the numbers stack up, the actual unit or what the unit is does not matter. It can be a flat. It can be anything. So long as the numbers stack up, that's what it's all about. Also, our property leads secured, so I cannot be circumvented. The property leads aren't because we couldn't. There's no way that we could possibly secure 35,000 property leads just for you guys. But what we have done is we've created a system whereby if you are interested in that property lead, you can secure it, and you also have the investors which are secured, and we have the contracts to do that. So they're not secured already because some of the deals might not stack up out of the 35,000 that we send you. So it's your responsibility to look at the numbers and say, yes, this does work. Let's pursue this one. This is what I need to do with this property. How many franchisees do we currently have? That's an easy question to answer. That's 70. Brilliant. Thanks to your answer to my rather long question. You're welcome, Andrew. Not a problem at all. If you need any other help, Andrew, then by all means get in touch. I'm going to give you my email address in just a second. So my email address, well, you can write to franchise@source.co, or my personal email address is chris.kirkwood@source.co. So feel free to ask any questions there. I'm just going to hop into the chat and see if there's anything else that I have missed. I'll answer that one. I've answered this one, yeah. Grace, you've asked a question in here as well. Do you fund deals brought in by franchisees? What if a different area assigned to them? Any other limitations? That's fine, Grace. It doesn't matter. People can trade outside of their areas. Will this webinar be available as I'm working from home and need to take some calls? Yes, it will. You'll get a link tomorrow for the webinar recording. So you can have a look at there. What is the current status of property business globally across the UK, taking into consideration missions of business moving forward, short, mid, and long term, given your experience? Yeah, Sergio, great question about COVID-19 again. I don't think it's going to be a, a lot of the stuff that I've seen is there's no underlying economic issue with this. It's just purely a case of people not being able to go out there and do what they need to do. I've seen in some areas that new houses come onto the market has gone down by 95%. In other areas, it's gone down by something like 2%. And that's purely because some people can't get out, and it's the attitude of the estate agents of, some are just completely shutting down, some are trying to keep going and carry on trading. Long term, when everybody can start moving around again, and when business starts to recover, and when people come back from being furloughed or come back from being potentially short-term unemployed, then I think the recovery is going to be pretty quick. I have no reason to suspect that the recovery isn't going to be any longer than how quickly we shut down in the first place. Gary, yes, you're exactly right. To clarify, the 5% of net profit from month 13 onwards is payable continuously. So, for example, over the 5-year period, you pay 5% of net profit for years 2, 3, 4, and 5. Yep, that's exactly right, Gary. Yep. But please bear in mind, it's 5% of net profit. It's not turnover. Most franchises operate in turnover. I know, for instance, if you buy a McDonald's franchise, I think they charge something like 30% of turnover as to give you an example. That's a huge amount of money. We're interested in 5% of your net profit. So we're only interested in us taking money off you if you're clearly making money. That's the important thing. Is the recording available? Yes, it will be available tomorrow. So at that point, 2 more questions. If you have a development that does not have planning permission and you are a source franchisee, how would that work? We can, okay, that's yeah, good point. So we can advertise that opportunity out to our investor list of 130,000 people and say to them, look, we've got this project. We can't get funding on it right now because we need to get planning. If you pay for the planning, then we'll pay you back. If you pay £30,000 for the planning, in 6 months' time, we'll pay you back £36,000. So make a 10% return, or potentially more. Sorry, 20% return on that case. So we can go out there and we can find the investor for the franchisee to then get that project moving forward without the planning. So there are a number of ways of doing it. We have access to coming up with a solution for that. So good question. And finally, can you provide a link to the other seminars referred to during this? Just head over to YouTube. Head over to YouTube, type in Sourced, hit the subscription, subscribe to the channel, hit the bell to be notified when a new video comes on there, and you'll see all of the videos in there. We've got loads of videos in there. There's lots of different educational stuff that we've put out. So go to the channel, make sure you make the most of all of it. So at that point, all questions are answered. Oh no, there's one more. Can you just answered that one. Thanks for your help. You're welcome, Andrew. Not a problem at all. If anybody's got any questions for me, like I said, my email address is chris.kirkwood@sourced.co. And it is just .co, just like it is on this page here. So chris.kirkwood@sourced.co or franchise@sourced.co. And if anybody's got any further questions, I'll be happy to answer them. So pleasure spending the afternoon with you. I hope you're all, both you and your families are all safe and well. And if there's anything else I can help out with in the future, then please let me know. Have a good afternoon. Thanks very much. Bye.